And when you get the correct information and applicable information, it's going to empower yourself to take back control of really what you're trying to accomplish. It's an expert level understanding of the banking system to acquire high limit funding. A lot of people I've seen in my experience are scared of the banks, but I don't understand why, because the banks are in the business of giving out money. That's their whole goal, and their whole business operations is to give out funds. It's just we have to know how to go out and acquire those funds so that we can leverage it in our best interest or our entity's best interest, right? And it's ultimately leveraging other people's money to build wealth. When you look at the buildings, when you look at the investments, when you look at how these companies are growing, they are not taking their own funds in order to invest and grow their business. They are leveraging other people's money to acquire assets and create cash flow. And what I ultimately like to do is, why would anyone ever be scared of the banks? Because I know that they're in the business of lending money, and I want to be able to capitalize on that and leverage that. So it's ultimately teaching you how to have a higher status with the banks so that you can use them as tools or assets for your business. And that's the biggest thing that I'm going to talk about today. Now, there's a couple things that this is for. So who is this for? There's a couple things that we really work with. So one, the startup entrepreneur, either A, they just recently started their company, or they're looking to start their company soon, but they're overwhelmed with really how they're going to fund their operations or grow their business, right? We have a solution in order to help them acquire capital to do that. It's also very common for us to be working with business owners who are generating some revenue, but they're missing out on those opportunities that I talked about because they're investing all of those funds back into their business. And the other thing is that I mentioned in between the startup and the growing entrepreneur is we work with successful entrepreneurs already, 6, 7, 8-figure entrepreneurs who are looking to acquire more capital just to increase their buying power so that they have access to more resources. And ultimately, this is for people who love purchasing assets without risking their own money. Now, while I talk about who this is for, it's very important to talk about who this is not for so that we can set all of the proper expectations. So when I talk about funding, this is not for people who are thinking about possibly starting a business or just like the idea of funding. You must already have some kind of goal or goal in mind or business started so that you can leverage the funds, keyword leverage, so that you can generate that ROI and not just get funds just to say that you had access to capital, right? Number two, this is not for people who make excuses and complain at all. I want to show you applicable information so that you can act on it, which actually leads me to my third point. This is not for people who just want to learn information without being prepared to take action and get results. I want to give you time. I want to give you this information, but more importantly, I want you to act on this information and not just take it in and say, that's awesome or that's good, but I want you to be able to use this in order to grow your business and your operations and ultimately benefit your communities. And ultimately, this is really not for people who are not serious about receiving an additional 6+ figures in funding, right? Now we're going to get started into the foundation of the key components that it actually takes to get this started. So anytime you are looking for access to capital, I'm going to touch base on this in the beginning. I'm going to touch base on it later as well too. There are 3 C's that we look at when going to look access to capital. The first is credit. The second is cash. The third is collateral. So the foundation, or the really foundation for wherever you're starting on your funding journey, is you want to look in those 3 categories. Now, I'm going to teach you, because I personally don't want to leverage my own cash because I want to leverage other people's money. And I personally don't want to leverage my collateral or my assets in order to go and get funding. So what I'm going to teach you is how to leverage credit, whether personal credit or business credit, so that you can access the capital. Now, in order to increase your probability or your fundability, I suggest looking at both options because they all play a part together. Now, whenever we're talking about this, the very first thing that you have to know how to do is access your credit reports. Now, what you're going to do when you're going to maximize your funding probability. Everything that I'm going to talk to you about is maximizing your opportunities. Not here to talk to you about getting small amounts of funding. I want you to be able to access large amounts of capital. So there's three that we're really going to talk about as we go through this process. The three main credit reporting agencies we're going to talk about is TransUnion, Equifax, and Experian. Now, you want to know, it's important to know how to get yours, what it looks like, and how to structure. And there's a couple key points here. All of your information must line up exactly across all of the credit reporting agencies. That's both applicable to business credit reporting agencies and personal credit reporting agencies. Now, on the personal, you really want one name and one address to maximize those instant approvals. This also includes employers because it makes you look more stable, right? And the number one reason that people get denied is not necessarily because they don't qualify for funding. It's because of non-matching information. So the thing that I'm going to touch base on here in a second is that a lot of people believe, when you start talking about the credit reporting agencies, TransUnion, Experian, and Equifax, a lot of people believe that we have credit scores that are just stored in those companies. And that is false. The first thing I want to address is that these are private, individually owned companies, right? These are private for-profit companies. The other thing is that we don't have scores within those organizations. We have data. And this is why your information has to line up because, for example, let's say your name was Bob Jones. You are not the only other Bob Jones in the world. You can imagine how common a lot of our names are. So that provides the potential for our data to get mixed up with someone else. And so it's important that you understand what these reports look like so that you understand how to get access to capital. Now, when you look on the left of this chart, there's a couple different data points that we're going to talk about. And what I like to address is when you're looking for funding, the score does not matter. It does not matter. It is more about the profile and the data points that make up the profile. And I get it all the time. Hey, I've got a 700 credit score. I've got a 750 credit score. I can't get any funding. What's going on? And when we break down the data points, this is where you'll start to get a really good understanding. So there's a couple different, if you look on the left side of this, there's a couple different factors we're going to break down. We're going to look at utilization. We're going to look at inquiries. We're going to look at payment history. We're going to look at credit age. We're going to look at derogatory remarks, and we're going to look at total accounts. So when you look across, there's TransUnion, Experian, and Equifax because it matters for each individual credit reporting agency. So the first thing, let's break down utilization. Utilization, in very simple terms, is just the amount you are utilizing of an available credit limit as compared to the total amount available. So let's just use simple math. Let's say we have a $1,000 credit card. The key data point that we look at on this account is that we really don't want this information or this account over 30% utilization. So the key data is that you want to stay between 1 and 29%. So if you have a $1,000 credit card, what I see a lot of people believing is I have a $1,000 credit card, I can use the whole limit. You absolutely have the ability to, but it is not the best practice if you want to put yourself in position for funding. So like I said, we look at utilization. You want to have 1 to 29% of utilization to maximize your funding opportunities. That is overall, and that is per account as well too. So that's the first thing, utilization. Now, inquiries, it's something I see a lot. Someone has a great credit score, but they may have submitted a number of applications within the last couple months. And so they have a number of inquiries on their credit report. And even though they have a great credit score, they're still getting denied for funding. A key data point is within the last 6 to 12 months, you really ideally only want 0 to 2 inquiries, a maximum of 3. So for healthy, you want to stay with 0 to 2, under about 0 to 2 inquiries, maintaining on your credit report within the last 6 to 12 months. Now, payment history. When you're going to look for access to capital, banks and institutions are absolutely looking to give you access to capital, but They want to see that you have the ability to repay it. So when you're dealing with payment history, you can get access to capital, but you need a good history of being able to manage and pay back capital. So you want your payment history to be 100%, right? Credit age. Ultimately, you really want your average to be 4+ years. It's not the minimal, but these are ideal data points. You really want an average of 4+ years on your credit report. Derogatory remarks. This is anything negative reporting. So this is collections, charge-offs, bankruptcies, foreclosures, things of that nature. If they are currently on your report, the first thing I want you to know is that there are solutions available for you to address those, and you will absolutely need to address those before going through the funding process to put yourself in the best position possible. Now, ideally, you don't want any derogatory remarks on your credit report at all. When it comes to total accounts, you ideally want 10+ accounts, and banks typically like to see a good mixture. So they might want to see some credit cards on there, some auto loans, possible mortgages, things of that nature, and varying accounts from different lending institutions. Now, the thing at the bottom, as I kind of touched base on earlier, while these are the ideal metrics for maximum approvals, they are not the absolute determinants for an approval. But remember, I'm teaching you how to get high limits of capital, and I want you to get high limit approvals. I don't just want you to get small baby limit approvals, right? So this process, again, has kind of how I talked about earlier, is this process focuses less on the score and more on the accounts that it's actually based up on. Now, when it comes to accessing credit, you obviously need to know, you can obviously get access to your credit report, but you need to know the information that's being reported on your behalf. So there's a couple different things that you'll need to do. There are multiple credit monitoring services. Another popular site that we use, you can get access to your credit report for free. You can use annualcreditreport.com. Prior to COVID, you could only get once a year, once a year, you could get a free credit report. Now, since COVID, you can get a free weekly credit report, right, from all 3 credit reporting agencies. So there are multiple options in order for you to be able to access your credit report. It's important because you want to find and easily eliminate issues on your credit report when you understand how to access and read it. And there's a couple different things that it's going to give you when you're looking at this credit monitoring. It's going to provide a full picture of your credit for all 3 bureaus, TransUnion, Experian, and Equifax. It's going to give you regular update on your credit scores. It's very, very important that you're on top of that. You also want to compare your reports to identify any potential discrepancies, because as I talked about before, the number one reason people get denied is because of non-matching information. And the other thing is you want to set the foundation, because when you set the foundation, you want to put yourself in the best position possible to get funding before you start actually submitting applications for funding, right? And the other thing that it's going to do is it's going to help you manage the timing of the actual applications and funding applications that you are actually submitting, right? Very important. Now, the second step to this. So the first step is getting access to your credit report. Once you have access to your credit report, you can see and identify that information. Now, remember, there are 3 different credit reporting agencies: TransUnion, Experian, and Equifax. So the second part to that is, after you see the information, you want to prioritize banks that you either have relationships with or that you have accounts with. Now, the other thing is that you're going to choose banks that align with your strongest credit reporting agency. So again, TransUnion, Experian, or Equifax. You're going to prioritize banks based on the strength of the agency that they're reporting to. You're also, relationships matter. They matter in life. They matter in business. They absolutely matter in banking. So you also want to prioritize banks where you already have strong relationships with. What does that mean? Maybe you have a checking account. Maybe you have a credit card with them. Maybe you have an auto loan with them. Maybe you have a mortgage. Banking is like dating. And the more products that you have with a bank, the more willing they are to work with you and give you access to more products, right? And then the other thing is, when you're looking for access to capital, the other thing that I like to break down is that most people, when they're looking for access to capital, they're looking for 100,000, 50,000, 100,000, 200,000. Still absolutely possible to get the funding. It's just that when most people think about going to get funding, they think of, hey, I'm going to go to one bank and get all of the funding that I'm looking for. It's not the best practice. You can absolutely get $50,000, $100,000, $200,000 in funding when you understand how to put yourself in the position. But generally speaking, most people cannot go to one bank and get access to the full capital they're looking for. You want to leverage multiple banks and multiple relationships in order to access funding. So what I'm typically going to suggest is that you would at least look for funding from 5 to 10 banks, typically at minimal 5, depending on the amount of funding that you're looking for. Now, as an example, we give you some examples. So if you're looking for places that can actually get access to capital and you have a good TransUnion, you could look at banks like Navy Federal. You could look at banks like US Bank. You could look at banks like Cadence. If you're looking at Experian, you could look at banks like Amex, or which stands for American Express. You can look at banks like First Horizon or PNC. If you're looking at Equifax, you can look at banks like Truist, Chase, and PenFed. And contrary to popular belief, there are thousands of banks nationwide that you can use to leverage for your funding results, right? And the result of one bank does not dictate the result from another bank, right? Very important. Now, the first step to that is, so the first step to the funding process is the credit monitoring to access the report. The second step is selecting the banks. Now, the BRM, which stands in the industry, stands for Banking Relationship Managers. And I also want to give you an idea to the long-term funding strategy. So a lot of people, when they're talking about funding as of lately on the internet, a lot of people are talking about funding by just randomly submitting online applications and hoping and praying that they get a result. That is not the best practices, and that is not what I'm going to teach you at any given time. What you want to be leveraging, again, relationships matter in life, they matter in business, they absolutely matter in banking. When it comes to banking, you want to be using qualified bankers at the institutions that you are applying for in order to process your application for two reasons. That banker has a relationship with underwriting, some form of relationship with underwriting, and you want to be able to leverage those relationships for security purposes and for potential much higher limits, right? So working with the banker is going to increase your approval chances and the credit limits that you typically receive. Now, the way that I'm going to coach you how to do this is I'm going to coach you how to leverage and get access to multiple banks. And ideally, when you have the data points in line, like how I'm talking about through this presentation, is your ideal funding. It says 100,000 because I typically am going to coach you to get 100,000 plus, but you can aim for 50,000 to 250,000 realistically in your initial round of funding based on the data points that I talked to you about leveraging that we've discussed so far. Now, the key here, and this is why I talk about this is not for people who do not have some kind of strategy to invest the funds, because the key here is you're going to use that capital and you're going to fund your key ventures, whether it's your business, whether it's your real estate, whether it's your stocks, whether it's your networking, whatever the case may be. You're going to leverage it and you're going to manage it well. Ultimately, what you're going to do is this is going to strengthen and build your credit profiles. So what's going to happen is you're going to leverage the funding that you have for 6 to 12 months. After aging 6 to 12 months, you're going to duplicate the same exact process. Let's back up. I teach you how to leverage 5 to 10 banks and going to get the funding that you're looking for initially. But as mentioned, there are thousands of banks nationwide. There is a lot of opportunity to duplicate this process. And what you're going to do is you're going to leverage your stronger financial standing and business credit profiles. Let's talk about this. Banks are in the business of lending. Just like every other business out there, they are in competition. My apologies. They are in competition with the other lenders. They compete for your business. You just have to know how to put yourself in a position to make banks compete for you, to compete for your business. And when you establish the stronger financial standing and those business credit profiles, it makes you a more qualified or lendable business. So I hope that makes sense. The other thing is that you can expect similar funding, similar results on subsequent rounds, because we're talking about comparable credit. In full transparency, the reason that I teach you to leverage multiple banks is because it's a lot harder when you don't really have credit or that history to go and get 50, 100,000 from one bank, because your credit profile may not reflect that lendability. However, after you go out and acquire 50, 100, $200,000 in capital, now your credit profile is strong enough. And so when you go for subsequent rounds, banks and lenders don't like to be the first lender that gives you the big investment. But when you have the profile that's already established, now they know they have to compete for your business. So they're typically going to use what's called comparable credit and give you similar limits to what you already have, because again, they're competing for your business. So I hope that makes sense. Now, long-term goal is that you're going to consistently manage the funding to build access to multiple six-figure credit lines. Some of our clients duplicate this same exact strategy, and we have helped clients reach over $1 million plus in total business capital over time by leveraging this. So I hope this makes a lot of sense. If not, like I said, there will be some time at the end that I can answer some questions. Now, in order to do this and get business funding, you have to make sure that your business is structured properly. I consult a lot of people. They have a business established. However, it's not necessarily established properly. And when you understand, when you're going to increase the amount you get funded, when you do understand how to actually structure your business properly. So in just a second, I'm going to show you how to solve the three biggest problems that big business owners face. One, properly setting up the business to be perceived to run like a business instead of a hobby. Number two, create a proven system to get your business funded with minimal documentation. When you have good credit and when you have your profile structured properly and you have your structure structured properly or positioned properly, you are perceived to be a much more professional business because you hit certain data points that the banks are looking for. Therefore, you are more credible on the front end because you're seen as operating as a professional business as compared to a hobby. And when you're able to do that and position yourself like this, you hit certain data points of security and reporting. Therefore, you're going to be able to get access to capital with minimal or less documentation, right? And it's ultimately how to leverage banks as your investors. You want to, a lot of people, they give up percentages of their business for equity for small amounts of capital when you can just simply leverage banks and make them compete for you to be your investor. Now, to understand how to get approved, you have to understand why most businesses get denied. So most businesses get denied because of fundability, which ultimately we talk about lender compatibility. It's all of the data points that we've discussed up to this point and some of the ones that we're going to discuss in just a second. You need to divorce yourself from your business. Your business is a separate entity. It gets a separate EIN. It gets a separate business address. It gets a separate phone number. You need to divorce yourself from your business in order to be seen and be perceived as a much more stable business. Now, applicants need to structure the foundation to building business credit. A lot of people don't know how to leverage their current assets or income to maximize the funding opportunities that they're in. Most businesses also don't set up with any of the business CRAs, which are the business credit reporting agencies, which you need to know how to set that up. And then no open credit accounts with major revolving credit card companies, right? American Express, Visa, Discover, MasterCard. These are the major credit card companies and issuers for capital and the fastest way to start building credit. Now, what I'm going to teach you how to do is leverage entities in order to go and access capital. Now, for me personally, I can only teach you from what I do personally and what I help my clients do, right? So I know that this is a trust class and this is a trust community. So I'm going to teach you from my perspective is best practice for me and our clients. So it is, the first thing I want to say is that it's absolutely possible to get a trust funded. However, a trust is treated differently than a state established entity. So what I teach you to do is how to leverage entities, public entities, to acquire access to capital while keeping the trust private, but leveraging the entities in the best interest of the trust. Let me explain. So For one, for me personally, I would like my trust to be private. I don't want my trust to take on the risk. So for me personally, understanding that thing first, privacy first, and then two, that the underwriting to get a trust funded requires a lot more documentation, paperwork, and proof of assets in order to get the trust funded because it works from a completely different department. So what I teach you how to do is leverage the players in the banking system with public entities, typically through LLCs and corporations, right? Now, let me break this down, because when you leverage these entities, they do have to be structured properly for reporting records because they will be established on public record, right? So for one, I don't want to make any assumption just because some of you may have a business established, some of you may need to have a business established, and I want to make sure that your business is set up the right way. So I'm going to go through a couple different things. Number one, starting at the foundation, if you're going to have a business established, you need to establish a business name. Now, moving on to this, to be professional, you want to create a domain or a website link that is the same as your business. So I use this example all the time. If your business is ABC Consulting, you don't want your website to be DEF Consulting. You want your website and domain to be the same as your business name so that it's easy to find. Step two to that is because you're going to set up your business email address at your business website. So for example, if your website is ABC Consulting, your name potentially could be Bob at abcconsulting.com. That looks a lot more professional than Bob's Consulting at gmail.com or at yahoo.com or at hotmail.com. It's still possible to get funding. It's just, again, I'm going to be teaching you how to maximize funding, not just get in the door, right? Now, just as I talked about earlier, you want to have a business address, you want to have a business phone number that's separate. You separate yourself from the business. Now, when you have that information, step three to that would be applying to the SOS or the Secretary of State. Every state has a Secretary of State where these entities are formed and established. You can do it yourself or you can use a third party. Now, you guys are familiar with registered agents. The fourth thing of that, you do want to get a registered agent who can accept mail and information on your behalf. And you want to create that operating agreement for your business or the bylaws for either the operating agreement for your LLCs or your bylaws for your corporations, right? Now, the fifth step to that is get an EIN. You guys know how to get an EIN for trust. Very, very similar process to go and get EINs for public entities. And I always emphasize here, it is free. I cannot tell you over the years how many times I've had a conversation with somebody who has paid someone hundreds of dollars to go and get an EIN. It takes 5 minutes to get an EIN and it is free, right? I always have to clarify that. The other thing that I'm going to always suggest to you as well too, not necessarily, but I'm going to suggest it so that you can start building business credit. And then also you would need it if you're going to get into government contracting. You do need to obtain a DNB, which is a Dun and Bradstreet number. Now, step 6 is establishing some kind of online presence. Build a website, a YouTube, Facebook, Instagram, something of that nature for your business. Now, when it comes to websites, you don't have to spend thousands of dollars or do this intricate, detailed website. It can be a basic 1-page, 2-page website. It just makes your business look a lot more professional. Now, number 7, the other thing I can't tell you is, it happens more common than it really supposed to, is that people run a business and they have a business established, but they don't have a business bank account. They might still be using their personal bank account in order to process those funds. You need to open a business bank account. When you do that at these different banks, because you want to open up a bank at the institutions that you're applying for. Now, I talk about relationships. For business, you need to open up a business checking. It's optional to open a business savings, and it's also optional. Remember, banking is like dating. The more products you have with a bank, the more interest you show in them. So in return, the more interest they are going to show you. It is optional. You need to open up a business bank account, but when you go to these other banks, if you want to strengthen your relationship, it's optional for you to open up a personal bank account as well too. Now, the other thing, when you open the bank account, you also need to make some kind of deposit. I'm going to tell you, depending on the bank, minimal $100. Obviously, the more money you put into a bank, the stronger your relationship will be. Number 8 is I talk about using different banking products. So what are products at a bank? They're merchant accounts, their bank accounts, their credit products, credit cards, auto loans, things of that nature. Those are considered products when you're dealing with an actual bank. Now, that's how you set the foundation. Now, the thing I want to get into, give me just a second. Let me get a sip of water and we'll break down how to actually establish a business. All right. So there's 3 ways that I typically am going to help someone or assist someone, or that someone starts the business funding journey. So we're going to talk over 3 things. We're going to talk about startups, we're going to talk about age corporations, and we're going to talk about acquisitions, and we're going to talk about the pros and cons of each one, right? Startup. Some clients, they need a business. They may have just started up, or they need to start up a company. A couple benefits with a startup company. You get the maximum flexibility and creativity when building a business from the ground up, right? You can create unique offerings, new markets, names. It can be established with whatever you want it to be because it's a startup company. Now, contrary to popular belief, startups can still secure capital, usually suggest the entity being about 30 days old, at least, of being established. But although it's able to get a new entity established or funded, I'm going to tell you that the older the business is, the easier it is to get funded because of credibility. So it's possible to get the startups funded. It happens all the time, but funding is easier and you will get higher amounts with older entities, which leads me on to my next topic. One of the things that people use that can fast track the business funding process whenever it comes to leveraging age are age corporations. These are legally established businesses that were legally established and formed previously for their age. Now, when you have a business with age, you get broader access to business credit and financing due to the corporation's age and longer history of being established. Very, very important. The only thing that I talk about with age corps is that you must do it with somebody who is qualified or that is familiar in dealing with age corporations, because you need to get a reputable source in order to acquire age corporations. The other thing is acquisitions. So acquisitions is one of my personal favorite ways to leverage funding and actually expand the business. So you can actually fast track funding by acquiring a business that is already established and operational, and you acquire their operations and their market presence, right? Now, when you do that, you're acquiring a business that is already performing. Therefore, you get immediate access to revenue, trained staff, and valuable customer relations. Now, the thing about acquisitions, it's amazing. Like I said, it's one of my personal favorite ways to grow and operate in business, but you do need to be skilled in acquisitions because it does require careful evaluation of a business's financial health and a smooth integration to a new owner's business. Now, whenever I'm talking about funding programs, remember, I'm going to primarily talk about business funding. When it comes to business funding, there are many funding programs available. Our focus primarily is 0% business credit cards and business lines of credit. Business lines of credit is extremely popular for most business owners. I prefer personal business 0% business credit cards because in what market can you leverage 0% for 12 to 18 months and then also still be able to leverage it past that by implementing strategies that we teach? Because really, honestly, you can't find a better option to leverage funding than 0% funding to leverage your operations. However, that is not the only funding program that we assist with. So I want to give you guys a slight introduction to a lot of the funding programs that we facilitate with. So we assist with loans. When you're looking at loans, we can assist with DSCR, which just simply stands for debt service coverage ratios. That's a great program. Auto financing. We can do auto financing in the business and the personal. We can do fleet financing. We can do term loans. We have extensive connections with the SBA. There is not an SBA program that we don't have extensive contacts in order to be able to facilitate. We can also facilitate equipment financing. When it comes to credit cards, we can do personal credit, business credit, travel rewards, cashback rewards, corporate credit, whatever is actually applicable to your situation. When it comes to lines of credit, business lines of credit, home equity lines of credit, personal lines of credit, investment properties, and securities-backed lines of credit. And then we have other financing. So just kind of like how I talked about initially, primarily what we focus on is credit-based financing, whether personal credit or business credit-based financing. Now, what happens is sometimes we have a client who may have some credit challenges, whether on their personal or business credit, but they have a business that makes revenue. There are still options in order to get them funded as well too. And if you look at some of those, you can look at like merchant cash advances, you can look at invoice factoring, you can look at asset-based lending, revenue-based lending, and inventory financing as well too. So there's a lot of programs that we can facilitate. Now, again, what we focus on is credit-based financing just because it gives you the most results and most flexibility. Now, I want to give you a little bit of showing what is possible by leveraging some of the strategies that we've talked about today. But before I do that, I always have to state again, past performances do not guarantee future results, and every situation is different based on your individual specific structure of your information. Now, a couple case studies that I like to go over, which highlight a couple different things for us. So the first thing is kind of what I was talking about a second ago. Ideally, we like to put you in a position where you have credit-based financing because you get the best terms and you get the most flexibility. However, I always like to talk about Divvy, or because it's one of the revenue-based options, currently Bill, because there was a client who came to us. He had a very high successful business. He had a 7-figure business. And he had really bootstrapped his business. So he had done what I was talking about earlier. He built a very successful business by taking his funds, investing all of his funds back into the business, right? But he had never leveraged capital before. And one of the things that he came to us before, because he had some credit challenges, he automatically assumed that he wouldn't be able to get access to capital. And so ultimately what we did was he was able, despite his credit challenges, he was able to come through. We were able to leverage this platform and get him $100,000 in capital, which is huge for a business who was used to putting all of their funds directly back into the business and never having any kind of time to expand on that. So that's important. Now, the other thing is when we like to talk about funding, I like to leverage multiple banks in order to get access to capital. But I also, depending on the bank, I also like to leverage one bank to get multiple products. And one of the things that you can leverage this is that one of my favorite products, like I said, are the business credit cards and the business lines of credit. There's a bank called KeyBank where we were able to take a client through KeyBank. We were able to get 2 products at one bank, a $50,000 line of credit, a $40,000 business credit card, which would equal $90,000 total from one bank at 2 different products, leveraging the resources and this information. The other thing is that we have a client. So Chase is one of the biggest, actually is the #1 lender in the United States as of today and the date of this recording. Now, one of the biggest lenders in the United States. And a lot of people, when they think about funding, they turn away from major banks. They think, oh, I'm not in a position, or maybe they think that they're not, quote unquote, worthy of major banks, but you can absolutely still leverage major banks, especially leveraging the things that we teach you. And there was a client, they did have a established business, and they were able to go to the #1 bank in the nation as of currently, and able to get a $75,000 approval from one bank. Now, the truth is that honestly, this happens a lot, right? And this is a very duplicatable process, and there are hundreds of results that come along with this. And the truth is that these results come from having a strategy in place, from all the data points when you structure the data, like we talked about, which ultimately make it easy and predictable for you to fund your business. And I know that we covered a lot, but there's really only 2 things that matter throughout this whole process. Because what I taught you through the whole thing is setting the foundation. When you set the foundation, the first step is setting the foundation to maximize your funding opportunities. The second is getting high limit approvals, submitting the application after those data points are aligned to put yourself in position to get those high limit approvals. And you do this by very simply following a simplified process to to achieve consistent high limit funding results, leveraging banking relationship managers, understanding application rules, and understanding what relevant bureaus banks actually review in consideration for an approval. Now, again, I'm someone who likes numbers. I'm someone who likes to set the expectations on the front end. So let's say, for example, you say, okay, I'm doing all this. I'm going to structure this. I'm going to decide to proceed. What does this actually look like when you actually go through the process? So again, I'm going to tell you minimally choose 5 banks, somewhere between 5 and 10. Now, your initial sequence of 5 to 10 banks can be modified based on the approval results. So if you choose 5 to 10, it's not like you're stuck to that 5 or 10. You can add or you can add or take away as your results come in. So you may receive fewer or more banks depending on the outcome of your initial sequence. Now, let me give you an example of what an 8-bank sequence looks like in order to acquire 100,000, right? So you might go to bank 1 and get a $12,000 approval. Bank 2 might deny you. Bank 3, you might get 50K. Bank 4 might give you 20K. Bank 5 would be a denial. Bank 6, 15. 7, a denial. Bank 8 came through with the approval. It's just very low, 3,000. But as you can see, when you look at the math here, because when you leverage different banks, the decision from one bank does not dictate the decision from another. So even though they went through an 8-bank sequence and they had a variety of different levels of approvals, they were still able to acquire $100,000 in capital. And the reason you do this is because it allows you to leverage multiple relationships, which ensures flexibility and the best chance of reaching your funding goal, right? That's the ultimate goal of this. Now, obviously, we talked about a lot here. What does it actually take to get funded? So earlier, we talked about the maximum qualifications. Here is where we're going to talk about the minimum qualifications. Now, there's a couple different things that we look at. So if you will look at the right first, and then we'll come back over to the left. So there's a couple different things that you need to apply. Obviously, you're going to need basic details about you and your business if applicable. Now, depending on the standing or the profile or the credit profile or the financials of your business, there are document processes for funding versus no document processes for funding. There are funding programs that require tax returns, P&Ls, pay stubs, cash flow statements, things of that nature. And then there are programs that when your business or credit is structured properly, they won't ask for any financial documentation or very low documentation. So there's no doc funding programs versus full doc funding programs. There are multiple options to choose depending on your particular situation. Now, what I touched base on earlier are the 3 C's that come into consideration whenever you're looking for funding. That is credit, that is cash, or that is collateral. Credit profiles based on the personal or business credit profile, cash or revenue for the business that you actually make, or collateral, any assets that you have currently that you could potentially use in order to access the capital. Now, looking back to the left, what are the data points that it takes to actually get approved? So generally speaking, I really don't like talking about credit scores whenever going through this process, just because, in my opinion, like I said, the credit score really doesn't matter. Gives you a good general idea of kind of what's going on with funding, but it's more about the data points that make up the credit profile. However, for general information, typically you would need a 680 plus personal credit score across the board. That's TransUnion, Experian, or Equifax. Now, one major credit card. So the major credit cards that we talked about, Visa, MasterCard, Amex, Discover, right? You ideally want at least one card with at least a $2,000 limit. That is ideal, especially when you're looking for good amounts of funding, 50,000, 100,000 plus. Kind of like we talked about earlier, no derogatory remarks, no collections, no bankruptcies, no derogatory charge or charge-offs, any information of that. If you have late payments, minimally, no late payments within the last 12 months, ideally, no late payments within the last 24 months. So no late payments within the last year or two, minimally, no late payments within the last year. Now, no more than 3 new inquiries within the last 6 to 12 months. I know that credit inquiries show up on your credit report for 2 years. They're really not they're not impactful really after 12 months. Primarily, really, whenever you're looking for funding, banks are only looking specifically how many inquiries within the last 6 to 12 months. even though they stay on there for 2 years. And then kind of like that data point that we talked about earlier, you want to stay between 1 to 30% utilization whenever you're doing that. Now, when you match these data points along with everything that we talked about in this, and like I said, you will get a recording, so please watch this again. When you have all those data points, then you're in a position to move forward with applying for capital. Now, ultimately, I gave you a lot of good information. I gave you a lot of value, I hope. And ultimately, what are the next steps? So the next step, again, that I talked about in the very beginning, I give you this information because I want you to act on this information and go and get the funding. So the first thing is that you take action, you follow these steps, and you go and get the funding that you need. However, we understand that after all of the years teaching and educating on business funding, sometimes people are just like, listen, I get it. This is great information. However, it's a little overwhelming, or they don't have the time, or whatever the case may be. So optionally, we do offer these services if you need assistance, right? So we do offer a team to handle the entire funding process from A to B with a full white glove service. We do have the system and trusted bankers to manage the funding process. So for us, we have relationships with hundreds of banks nationwide, every national bank you can think of, along with hundreds of banks and credit unions across the nation, who we leverage in order to get you access to capital. And with our process, you get a one-on-one consult to prepare for each and every step of the way. So we offer a very white glove educational service from start to finish as you go through the funding process. Now, a lot of people ask me, okay, I would love to work with you, but how much money do I have to come out of it to get started? And for us, we are strictly a performance-based organization. So what that means is that for our services, we don't charge anything up front in order for us to facilitate the deal. Now, here's what we offer, just for clarification. You do a complimentary audit. So regardless, everyone at the end of this call will get an opportunity, regardless of whether you think you're qualified or disqualified or whatever. Please don't make an assumption, because we're going to give you a complimentary audit and intake with our team. In the industry, sometimes the intake of the audit can be valued at $500 to $1,000 plus. We offer it completely free. So that's the first thing. Second is that you do get multiple funding coaching and consults to make sure that you are up to date and facilitate and supported through the funding process. We have a full-time support staff. We leverage our introduction to our banking network that we've spent years building relationships with. You don't have to go out and figure it out on your own. We also offer continued education, because we understand that for a lot of our clients, they may not have had access to 50 or 100,000 or 200,000 before. And so for us, once you actually complete the funding process, you get access to our communities and our resources for continued education so that you can build upon what we've done. And as mentioned, we are strictly a performance-based funding organization. So with us, our goal is to fund you 100,000 plus. Ultimately, here's what we offer, and here's how we do it. So the complimentary audit, that is a one-on-one intake call for personal and business for the personal and business intake. So as mentioned, at the end, you're going to get a link. Everyone gets that complimentary intake call where we'll walk you through collecting any personal or applicable business information. The second thing from there is our ultimate goal is to figure out the first steps to get you funded. Everyone's first step is going to be a little different, depending on whether you're currently qualified or whether we may need to address some things prior to going through the funding process. Now, we also create a sequence customized to you. So your sequence of actions is different based on the information that you have, right? Everybody's first step to get funding is going to be different. Everybody's banks that they use whenever they start funding is going to be different. How we do it, we do the one-on-one coaching and consults. Now, the application assistance, we are not, like I said, just submitting random online applications. We are actually executing the sequence with qualified banking relationship managers. Now, after review, the biggest thing is, like I said, when you get that link, complete the intake process, because the thing about us is that regardless of whether you're able to get funded now or whether we have to put a game plan together for you to get funded in the future, the guarantee that we have is that every client will have a clear roadmap to getting funded and know exactly what first steps they need to take, regardless of what your current situation is, right? So very important. What's going to happen is Christina, she's going to have a link. She will very shortly drop that link for you. Please, I encourage you, like I said, whether you believe you're ready to get funded now, or whether you need to put together a funding plan in the future, I encourage you all to take advantage of the complimentary audit so that me and my team can help you understand exactly what you need to do in order to get funded, right? And now I want you to understand how to get support, because when you reach out to us, I also want to make sure that you know how to get a response as well too. Now, I want you to monitor anytime that you submit your information. I want you to monitor your spam or your promotional email folder immediately after booking. Your email, our emails are supposed to go to your main inbox. However, we have thousands of emails that go out every single day, sometimes just for marketing purposes or whatever the case may be. Sometimes our emails, depending on your email setting, might go to your spam or your promotional folder. I want you to check that, because there's going to be some information in there for you so that you can onboard with us. Now, very important, we are primarily a text-based support team. You're going to get a lot of text. You're going to get text from us. I want you to understand, yes, the most common question I get is, when you get a text from us, can you text back? Yes, you can text back. We do a combination of AI for our automations, but we have a manual team, a full team on the back end of that. So yes, you can actually text that number back and you will get access to a real person that will communicate with you. Now, with that being said, we are primarily a text-based support system, and responses can take, depending on when you reach out to us in the day or the volume of that day, responses can take 3 to 24 business hours on average. Now, with that being said, I also want you to understand our hours of operation. So we work Monday through Friday, 10 a.m. Eastern to 9 p.m. Eastern. Our company is located in Orlando, Florida. So we are on the Eastern time zone, but we serve clients nationally. So we have hours in order to facilitate different deals in different time zones. So Monday through Friday, 10 a.m. Eastern to 9 p.m. Eastern. Saturday is 11 a.m. Eastern to 4 p.m. Eastern. So a little bit shorter day, but yes, we still do process applications and work with our clients. Sunday, we are closed. There is no staff on board Sundays. Therefore, obviously, you would not be able to expect a response or any applications being processed on Sunday. Now, I tried to make this as quick and fast and high level as possible and create a lot of value, but naturally, generally speaking, we have a lot of questions at the end. So of course, I want to take I've got about 15, 20 minutes. Took me a little longer to do that than normal. But I've taken about 15, 20 minutes that I can be here to answer whatever questions, concerns, any kind of clarification that you have.
Thank you so much, Dorsey. I appreciate you so much every time that you come into the workshop and you pour into the community. Thank you. So everyone, we're going to open up the floor for Q&A for Dorsey so that we can respect his time. So please raise your hand so if you have a question for Mr. Dorsey. And I see Cairo has his hand up.
Yes, I do. Good afternoon, Mr. Dorsey. Thank you again, Christina.
Good afternoon. Good afternoon.
Absolutely.
So I have a team. I have a team of four. We're a couple of us in New York, a couple of us out west. What I wanted to know is if we could set up some type of meeting with the four of us, our four, and then perhaps you or someone else on your team. I'm not sure who, but if we could get the information at the same time, because one of the things that I find when you have a team is getting everyone to move at the same time, right? And I think that is the best way to do this. This way, I mean, you use the example 100K to 250K. I'm seeing that number times four, to be honest, right? And so, yeah, that was my question. If I set up a meeting, like I have the link opened up where Christina just shared. If I can set something up, can the four of us hop on that same call and at least get this initial meeting started that way? And then if we want to break off and then do the full individual, um, because it'll be individual processes, right? But it'll be all of the funding will go into one pool. Does that make sense?
Understood. Yes, that makes sense.
Great.
Now, that's a great question. We deal with that question a lot. Now, the first thing I want to clarify is it's so funding is very specific. So we have to be
Yeah.
mindful of time and we have to also see the specific information. So as
Mm.
far as the intake process, what happens on the intake process, just in full transparency, it's scheduled to be about a 30-minute Zoom. So when you actually enroll, you're going to get a calendar to book with someone on my team in order to go through the full intake process. Now, the intake process is individual because we're walking you through how to get access to the credit report and the business info for your particular situation. Now, what happens is if you're concerned about speed, our intake process from intake process to our call completed is probably about 72 hours. Sometimes about 3, maybe like 4 days. So you and your partners would have to do your intake process separately, but then we could potentially do, based on the information collected during the intake process, then we could do a group call together to talk about who is qualified, how much funding you need, things of that nature. Well, but for the intake process specifically, that would be catered to each individual person.
Okay.
Does that make
Got
sense?
It does.
So in best practice, you would do that. You would fill out the link, and then you could also just copy and share that link to any of your partners and just tell them, hey, this is the opportunity, this is the information I got. I want you guys to, complete this and go down this, go down this process as well.
Okay, will do. Thank you.
Of course.
Yeah. Oh, whoever Terry is, I guess your mic is muted on accident or something. But anyway, Mr. Dorsey, my question for you was when you talk about the personal credit side, do y'all help people with that, like to fix their personal credit side, or just come to y'all once that's fixed? Yeah.
Phenomenal question. So what I tell everyone is come to us regardless of what you assume that your situation is, because we're able to break down the specifics of your situation. Now, a lot of times people think they have a worse situation than what they actually have, and we're able to address that a lot quicker than what most people assume. Now, in full transparency, we personally, for legal and compliance purposes, we don't do the credit repair on your behalf. Now, what we do have is we have trusted partners. So we have trusted partners that will outsource credit repair to, depending on what's going on with your situation. That's why I say come to us first so that we can highlight, and then depending on your situation, we'll put you in contact with our best partner. They'll go through and address that. And then once you're actually ready for funding, then you'll come back to us. But we tell you to go through us first. That way we can at least specifically educate you on what's going on with your particular situation.
Okay, cool. Appreciate it.
Of course. Any other questions?
No.
Cool. It looks like that was all the hands that were raised. I'll see if anybody, I'll give it like another minute or two, see if anybody else has any questions.
All right. Is there anything in the chat too? I'll check the chat.
Like
Sandy put her
Sandy.
hand.
Yep, Sandy just put her hand up. Sandy, if you'll go ahead.
Oh, Mr. Dorsey, thank you so much for your wealth of information. My question is regarding trust. You said it's difficult to get funding for trust.
So it's not difficult to get funding for the trust. It just is more documentation. So for example, if you're going to get a trust funded, you're going to need all of the documentation to outline all the different trustees. Sometimes they may ask some of your invading information, in my opinion, just to see how the trust is actually established. But the other thing is that when it actually gets time for funding is you're going to need full documentation of the trust income or assets within that trust. So it's not that it's necessarily harder, it has to be documentation of the assets and income that it makes, and it's just a little bit slower process because it's just a different department.
What about if you have an asset that's basically free and clear and you wanted to get funding on it? Would it still be difficult for that? Like a property?
No.
within the trust?
No, so you can do that. It's just that that asset would have to be documented within the documents, and then you would just be leveraging the collateral based funding to get that trust funded. Because to secure the funding, it would not be unsecured funding. It would be pledged based on the collateral that you have. But if you have the documentation to support it, absolutely, you can do it.
Thank you so much.
Of course. All right. And then it looks like CF has a hand raised as well. I can see you in here, but you're muted still as of currently.
Sorry about that.
There we go. All good. Now I can hear you.
Okay. Thank you. My question is regarding getting funding for my business. If the business is owned by the trust, I can get the funding or build the credit through the business separate from the trust. That would be easy because I have an established business. It's been established since 2017.
Okay.
And I'm having difficulty getting business credit cards. I've done well financially. The business is running. I don't have any issues, I don't think, with my personal credit. So I'm looking to find some property where I can. I'm home based now, but I want
Okay.
some property where I could have the business there and be able to rent part of the space out
Okay.
for others. So what I'm asking is, would my focus be on getting the business line of credit, or that might not be the right words? Should I finance it for the business, the established business itself, even though the trust owns the business? Does that make sense?
Yes, it does. For me
Okay.
personally, it's
Uh-huh.
it depends. There's not a right or wrong way. For me personally, the best practice is I always leverage established state entities, keep the trust private, and leverage the state entities, such as your business that's been established since 2017, to go and then get the funding on behalf of the trust.
Oh, okay. So let me make sure I understand. Although the business is owned by the trust, get the the business funding through the established business,
That is correct.
and
That's
it
how
won't
I
show.
would do it personally.
Okay. Okay. That makes sense. All right. Thank you.
Of course. All right. Looks like Juan C has a hand raised.
Hello. Hey, how you
Hey, how are
doing?
you?
Good. All right. Good presentation. I jumped in to catch you today. I've been trying to chime in each day and catch a little bit as I can, but you know, schedule and work and all of that makes it hard. But I did catch you today, and my question is, I have an established LLC. I have a few of them, 4 or 5 of them, and I've gotten funding, lines of credit, bunch of credit cards, but I'm trying to get to higher limits, you know, in those. Now, like amongst those, I have probably over $500,000
Okay.
on those. But I'm trying to get where that one card is, you know, at the 6-figure limit, or even lines of credit on those,
Okay.
because I do, you know, bills, new construction, things like that. And I have a partnership with a manufacturer. And so I'm kind of using my cash on there because they keep telling me, or have told me, that because of the lines of credit and the trade lines, all of them are about the same. You know, they're probably like 75,000 and going down on there. So like the highest limit for some of my suppliers are probably about like 75,000.
Okay.
So that how do I get that pushed up to higher? Because they said they checked the duns. I do have a 80 duns number, but just seeing those limits are not there.
Okay.
Because I need to get 200,000 lines with them, or whether I'm getting my bills and they're using their internal lending, because I can get 60 days using them. So from the time that we bill and everything is complete, because they're panel system, so we have a bill up in 5 days. So 60 days, I'm completely done and ready to sell it.
Okay.
But I'm having to pay for it at the end of the 30 days because I don't have that credit, worthiness with them to, get that internal financing.
Okay. Now, that's a great question, and that's a great scenario to be in. I know it might be a little frustrating, but it is a great scenario to be in, and I've done it. Now, for your particular situation, to really best advise, I would definitely, whenever we're doing, somebody who already has $250,000, $500,000 plus, it goes a little bit more strategic, because the goal is really to leverage what you already have for other
Right.
businesses to make other banks compete against, because you already have those profiles. So the first question I have is, what banks, I would need to understand what banks you currently have relationships with. Also, what state, because you could go through a potential where you might just need to open up some different relationships and leverage what you have currently to make another organization or entity compete for your business. Or depending on your state, sometimes what we do for clients who already have $500,000, plus in funding, sometimes you may need to establish what's called a foreign entity, depending on your state, so that you can go access banking for another bank in a different state. So those are a couple of different strategies, kind of what I would say. If the banks that you're currently with aren't increasing your limits, take what you already have and go make somebody else compete with it and go and get better financing options.
Okay.
But I would need to see your specific situation as regarding your state, what your business, what the business credit looks like, what the personal credit looks like, and then, like I said, really kind of understanding what banking relationships you have as of currently.
Okay. So what do I need to do to get more in depth with you to go over this stuff? And I'm in North Carolina.
Okay.
So yeah, all of my entities are, everything that I do business is in North Carolina.
Okay.
Haven't done anything really outside the states, in other states.
Okay. So yeah, so North Carolina is a good state. We fund a lot of clients. There are some banks close into some other states that typically I might say like another 2 or 3 other states, depending on where, what you currently have, or where you currently have relationships with. But there are possible solutions, and it's not something we haven't seen before. As far as getting in contact with us, Christina put a link in the chat, the Zoom chat. If you'll click on that, she has the link in there. It looks like the last comment, and you'll just be able to submit a very simple 2-page intake, where you'll actually schedule with someone on our team. And then they'll go through the intake process with you. And then what they'll do is then they'll actually book you with me.
Okay, cool. Then I have one more question for Christina.
Okay.
If she's still on. She might have stepped out. I jump back in later, I guess, when she comes back.
Okay.
But I appreciate you. I'm looking forward to, getting those slides that you said to review everything. And I've been following a few, people and jumped in a couple of, programs and gotten to this point, but now I'm trying to get to the next level. So I'm ready.
Awesome. Well, like I said, it sounds like you've done great already. Now it's just really leveraging what you already have to go and get higher limits. So you've already laid the foundation. It's just really building upon the foundation and, just being a little bit more strategic with it. That's all.
Right. Okay.
But yeah,
thanks.
Submit your information. We'll be able to get that. And you and I, like I said, can have a much deeper conversation and in our meeting and then really figure out what's going on and really what strategy we need to use.
All right, sound good. I appreciate you.
Of course. I'll talk to you soon.
Thanks.
All right, and it looks like Cairo, you put a hand back up. How can I help you?
I did, Mr. Dorsey. Hey, 1C, shout out to 1C, that $500,000 funded, brother.
Yeah.
Congratulations. Yeah, I like hearing that. Um, so this would be my third round of funding. Um, First round I got 5 figures, very low 5 figures. That was kind of like my test run, I call it. And the second round I got 6 figures.
Okay.
Not 1C level, but I got 6 figures. Each time, however, I faced some challenges with converting the over to cash. Right. And so that'd be my question. Like, are things in place with the funding playbook for I guess a smoother style of conversion?
Yes. Yes. There's a lot of strategies. I'll tell you, I would tell you for that conversation specifically, just because that gets a little bit more technical, book a
Hmm.
call. And it sounds like you're in a great position if you've already, done funding, where you can book that call and you and I can talk a little bit more specifically on ways that, we could liquidate. But yes, that's a very common thing that we teach is how to leverage 0%, continually leverage 0%, and ultimately still be able to liquidate if you, leverage that 0% card, still maintain 0% on your funds, and then really being able to, invest in whatever you have to do. Just because we work with a lot of real estate investors, cards are great, but sometimes they have to liquidate funds and, go to the table with
Yeah.
$50,000-$100,000 cash. So
Hmm.
absolutely, we can absolutely coach you and, see to see whatever options will work best for you. But yes, we've got
Okay.
multiple options for that.
Great. Thank you.
Of course, of course. All right, I've got about 5 more minutes if anybody else has a question. No hands as of currently, but I'll give it like another minute or two and see if anybody does. Just in case no question is a dumb question. I just always want to clarify that. Give it like another couple seconds. All right. Well, I don't see any other hands in here as of currently. So the biggest thing, like I said, never make any assumptions. My biggest thing here is to always be educational. We really want to help you figure out the first steps to get you funded. Everybody's first step is different, right? Some people might be ready for funding immediately for, their first round. Somebody may need to, address some, credit things before going forward. Somebody might already have $500,000, $1 million in funding, right? So the spectrum varies, but everybody's first step is different, and that's the most important step that needs to be done. So as always, I will make sure that you get a copy of this very shortly, of the presentation and the recording. With that being said, like I said, if you need me or want to get in contact with our team, Christina has put a link in the chat. If you want to connect with me personally, you can connect with me on social media at CEO Dorsey, Dorsey. And with that being said, I appreciate all of your time. I hope that this was extremely valuable, and I look forward to talking to each of you and then really helping you figure out what steps you need to do to get funded. So with that being said, Christine, I just wanted to verify that you were still in here.
Yes, I'm here. Thank you so much, Dorsey. I appreciate you so much. It's always a pleasure to have you come in with your expertise and all your years of experience, because our community members, they need that guidance. They need that help. They need to go down the road of being able to leverage the banks. The banks is leveraging us. We need to do what they do, and we need to leverage them. And so Dorsey has so many banking relationships with these bankers, that we need to be able to leverage Dorsey, okay, you guys, and his expertise and all the work that he put in throughout the years to develop these relationships to make it easier for us. Why do we have to, go walk into a bank anonymously with blindfolds on and not even know what the outcome is, right? When he already has the strategy. So I want everyone on the call, no matter what your credit score is, please go ahead and click that link so that you can book a call with his team, because you're then going to know what the next steps are, okay? So that you can get the OPM. So thank you, Dorsey. We appreciate you so much.
Thank you. I appreciate you all. I wish you all wealth, happiness, and abundance in every aspect of your life. I have reached my time, but I do appreciate all of you. I hope to look forward to talking to you, all of you, soon. Hope you have a great rest of your day, a prosperous week, and let's get it. I'll talk to y'all soon. Bye.
Yeah. Thank you. Bye. All right, awesome, guys. So we're going to continue Q&A. I know Juan C, I think Juan, you had a question for me. So everyone else who has questions based off of the information that I went over today, please go ahead and raise your hand so that I'm able to answer any and all questions. I did want to start with Juan because I think you had a question when I was away, right?
Yes, ma'am. How you doing?
I'm good. I never seen you on camera. You always with no camera, huh?
Yeah, my camera be out because I be doing everything. I be on job sites and it's noisy and all kind of stuff going on. So
All right, it's nice to see you. I like to see faces. So,
yes.
nice to see you, hon.
Hey, all right. I question is because I did the done for you. And
Yeah.
so I was wondering when would that start up? You know, I was trying to listen in, but couldn't fully pay attention to as you was going through things being each day. So, you know, I just went on and broke down and did it, said, let you handle it. And
Oh,
that
for
way,
sure, for sure, absolutely. Okay, so you should have gotten an email from Ika with the checklist, and so we need the information that's on the checklist. Were you able to send that information back to us? Because that's when it starts.
I haven't seen it.
Oh,
So
you
I
haven't?
need to go
Oh,
look for, right. I need to go back and look for that then because only emails that I seen were the documents for each day. And that's the only one that I've seen.
oh, okay. All right. So I'm gonna have Ika reach out to you today. So she is gonna reach out via email. Sometimes I'll be honest with you, sometimes our emails go to spam. We've had a lot of instances where they're like, oh, I found it. It was in spam or it was in promotions folder. So it might have gone there. That happens to us a lot. And but don't worry, I'm gonna have her resend it. So she's going to send it from her email, which is support@7waystowealth, and she's gonna CC me. My email is Christina@7waystowealth.com. So she'll go ahead and send that over today. So just be on the lookout so that we can get started. And so we need
Okay.
the information from you in order for us to get started with setting everything up for you, okay?
Gotcha. Okay. Yeah. Because definitely my link to join the Zoom today went into promotions. I'm looking everywhere from it. I'm like, I got all the documents and the files, but I don't see the link. And I had the links the other days, but I ended up finding it in promotions, you know, later on because I was
Yeah.
late joining in, but I did get here just in time to hear Dorsey, you know, do his thing and pimp that right on out for us.
Exactly. I know, right? I know, like our educators are just a wealth of information. So I'm glad that you were able to catch him because he doesn't bless us with his presence so often. He comes in like once or twice a month. So I'm glad you was able to catch him. If you save our email address, then it'll go straight into your inbox the next, time. So if you save 7waystowealth.com, then it'll go because we're always sending out information. So for example, the workshops, you can come every single month. So our next one is, I think June, let me see, June 2nd to the 6th. So every single time you're going to get those emails. And so hopefully they go into your inbox if you're able to save our domain.
Okay. I will do it. Thanks.
All right, perfect. You're welcome. Thanks for being here, Juan. Next we have Maxine. Hey, Maxine.
Hi, how are you? Thank you
I'm
so much
great.
for all
How
the
are you?
information.
You're welcome. Thank you for being
Mr. Dorsey,
here.
so that's wonderful.
I know he's so great. He's so great. I've been knowing him since 2021. And the people that I bring to you guys are people that I have personally worked with or that I've been knowing for years, and they're vetted and they're professionals, and I only bring you the best. So, yeah.
Thank you. My question is concerning the EIN.
Yes,
Okay,
ma'am.
I have arranged already to meet with the notary, myself, and my grantor for tomorrow to execute the trust. However, I want to change the address, and I wanted to know if I was to apply, or myself and a grantor was to apply for different EIN and slightly changing the name on the trust, would that affect anything or cause a conflict with the previous EIN that was just given this week, or the trust that I have right now that didn't change?
Okay, so it would look like a totally different entity. So, you are changing the name for the trust, right?
Just slightly, like just adding.
Okay. So which means that you're no longer going to use the previous EIN?
Yes,
You're applying for a new EIN with the new name change, right?
name. Yeah.
Okay, so that's completely fine. So it actually is going to look like a totally different entity. It's not going to look like the same entity because the name is different. It doesn't matter if you're, adding a word or deleting a word. It looks like a new entity. So with your previous EIN, you can just obviously choose not to use it, and
Ignore. Oh,
it just stays dormant. Some people like to go to the extent of contacting the IRS to cancel the EIN. So you can do both. You can either you can just choose not to use it, or you can contact them to cancel.
okay. Okay. Thank you so much. Thank you.
You are so welcome. You're so welcome. All right, next we have Miss Betty. Hey, Miss Betty, how are you?
Hey, I have a problem. I'm using, I'm good. Thank you. Thank you. Can I use the same virtual address for all three of my trusts? Um,
You can if you want to. So just know that whatever address that you're using, all three of them are going to obviously be associated with the same address. So I always tell people, if you have one of your trusts that you're going to be operating publicly, have that
mhm,
public facing trust. Like
mhm,
typically it's your business trust that's public facing. Have
mhm.
that trust have a separate address from your other trusts that are private and not doing business in the public.
Okay. Okay. Great. Okay. Now my next one. I think you just answered that one. Can I use the same phone number for each trust?
You're right. So that is a choice that you have to make as well. So I always tell people best practice is to have everything separate because these are separate entities.
Okay.
So,
Okay.
and as far as the phone number, I tell people to go to Free Route and get a Google Voice. So you can get, if you have multiple accounts. So what I would tell you to do is get a Gmail account for all three of your trusts, and then you can get a Google Voice for all three of your trusts so that they can have separate phone numbers.
Okay, great. Okay. My last one, I have not selected a grantor, so I'm a little bit behind. I wasn't here yesterday, so the list that you provided to us, how would I know which one to use? Because I don't know anyone.
I
uh,
know. Yeah. So basically you have to contact them, and you have to, build like a relationship. So usually we have the Facebook community, we have the Telegram chat. So they'll go and start to get familiar with our community members. But because you don't know anyone, um, you just have to, you just have to take a chance and pretty much pick somebody and then just develop a relationship with them. So sometimes what community members do is they will serve as a grantor, and they will have that other person serve as a grantor for them. So for example, if you, Miss Betty, if you wanted to serve as a grantor for Juan, and then Juan will then serve as a grantor for you, right? So that's why we built this community of trustees, because we have something where it's called a circle of trust, where I help you, you help me, right? I'll be your board member, you can be my board member. So it takes, it takes for us to build this community, for us to establish that circle of trust.
okay, okay. Now I have one other question. A sister on my other, the one that I told you that the attorney set up for me. I think I had used one of my sister. Um, um, but he was actually the attorney was my grantor.
Grantor, yeah.
But one of the person that I had in my trust was my sister's. But if she
Mhm.
doesn't know a whole lot about it, then it's best to work with someone that knows about a grantor, the functionality of a grantor, right? Instead of using someone
Yeah,
that
well,
has
the grantor pretty much, so one, you can have your sister serve as your grantor. So she has to execute the trust with you. She has to apply for the EIN, and sometimes they'll ask for her personal information when it's time for you to open up a bank account. So those are her only real requirements, is those three, right? Which is notarize the trust, apply for the EIN, and then provide her information to the bank if you choose a bank that asks for the grantor. Not all banks ask for the grantor, okay? So it just depends on the bank. And that's it. She doesn't have any other duties. So that's a beautiful thing where you can use her because she doesn't have to be trained on, trust operation or anything like that. Like just like your attorney, right? So your attorney, he served as your grantor, but did he have to do anything else? Do you have to stay connected to him on, connected on the hip? No, right? It was a one
yes.
and done transaction. It's the same thing with your sister. It's a one and done transaction.
Okay, all right, that's awesome. Okay, thank you.
You are so welcome, Miss Betty. Thank you for being here.
Mhm. I'm
All
enjoying it.
right. Yes. Thank you. Next we have Nick. Hey, Nick.
Hey, Christina.
Hey.
Um, so okay, a few things. First, just back to the as far as credit goes, if you have a business and a corporation or LLC or whatever that's owned by the business trust, if your goal is going to be building credit for this corporation and not if you're not building credit for the trust, then it doesn't matter about the address for them. Am I understanding that right?
It doesn't matter about the address for the trust if you're building credit for the company.
Right, right. The company that my business trust owns, if I'm only going to be applying for credit through this company and not trying to get credit for my business trust, then you get what I'm saying?
Yeah, so the only thing that I need you to keep in mind is that the business trust is going to appear on the Secretary of State. And so what name and address do you want on the Secretary of State? Okay, when people look up your business?
Okay, well, so no, okay, so what I mean by okay, I guess my point of that was I would still have an address for the business trust, like get the I posted one. But what I'm saying is, if I'm not building credit for those, then instead of having a separate I posted one for the business trust, family trust, and the 508, can they all just be to that one address? You get what I'm saying? Since I'm
Yeah,
not
so
building credit with those.
I wouldn't recommend that because your
Okay.
business trust is on the public records on the SOS, and now that address that is on the public records on the SOS is associated with two other trusts.
Okay, okay, cool. Okay. And that leads to my next question about the naming of the trust. So I know that we don't want the trust to be in my name or anything named after me, but I'm wondering, like, as far as that naming goes, for the business trust, the family trust, and then the 508, the ministry trust, do each of these names need to be something completely different so that they don't appear to be connected, or like in your example, if it was MC Holdings and MC Family Legacy and MC Ministries, is that okay? You get
That
what
is
I'm saying?
okay. That's completely
Okay.
okay. Yeah, so that's why it doesn't show that they're connected. Do you know how many companies like LLCs and corporations that have the same name? They have the same,
Yeah.
but one was set up in Florida, one was set up in Georgia, one was set up in Texas, and one was set up in California, right?
Okay.
So with your point, yeah, they could have similar words in the names. So like how I have
Okay.
MC in all three, absolutely, that's fine. It doesn't
Okay.
mean that they're associated or connected.
Okay. Cool. Okay. All right. That's all I got. Okay, appreciate it.
All right, Nick, cool. All right, next we have Kiana. Hi. How are you, Kiana?
I'm great. How you?
Wonderful today.
I got a question. It's about my grantor is out of state.
Yes, ma'am.
And if we can't get together, how will we do that as far as getting the paperwork signed and notarized? Should I sign it first and then send it, or that's probably gonna still be a problem?
Yeah, you don't necessarily have to sign it first, but what I tell people to do is if you want to send them the signature pages electronically, they can print it out, notarize it, and ship it to you. And the other way is that you can print it out and ship it to them, and they notarize it, ship it back to you. But yes, and so that's the best way and only way is that you have to ship them the notary pages, and then they ship it back to you once it's notarized.
Okay. Thank you so much.
You're welcome. Thank you for asking that really good question. Next we have Ambassador Wealth Management. I can't
Yeah,
see
this
his
is Sylvia.
Okay, Miss Sylvia, sorry, because I can't see your name. How
No,
are
that's
you?
okay. Yeah,
Yes.
that notarization question that she just asked, can it be electronically done as well?
I know you want
Okay.
wet ink.
Wet
Yes.
ink? Okay. Okay, now to my question. So I have land that's in my name that was transferred from my mom. So my mom, the reason why we moved it to my name is because she was trying to get home health services through Medicaid. So she quit claiming the property, the land, not it wasn't the property on it, was, but we tore it down. So it's all land. So right now it's in my name. Of course, I want to get it out of my name. So the question I have with that is there going to be what they call a look back period, or it doesn't matter once it's transferred to the trust?
It depends on the state. So typically some states have everything state specific with the Medicare. So they have from what I've seen, some states have a 2-year look back period, some have a 5-year look back period. So it's state specific.
Okay, yeah, I think Arkansas has a 5 years look back period.
Okay.
And that 5 years is from the time that, where does the 5 years start?
So it starts, that's a really good question. Usually it starts from whenever like, the services are rendered. So whatever it is, I'm not sure what she's doing. The scenarios that I know of is like if they started covering like a nursing home or something, then it'll start from there.
Okay. No, she's home, but they denied her. And so because she had the land on her paperwork, so they denied her. So she transferred the land in my name and reapplied. So, but they
Okay.
still haven't approved her, so it probably doesn't
Oh,
at this
okay.
point.
So yeah, so it starts from when they start, so when she's approved and they start rendering services.
Okay. And the last question I want to ask for you is when you were talking about the promissory note, and when you said that it was optional for the location, I guess at the very beginning, I can't think what it was
Um,
optional.
No, I don't know if I said if it was optional, I'm not sure, but what I said was you have to document the city and state where the loan is dispersed. So
And
so you would either use the city and state for the trust or where the trustee is located.
how do you make that? I mean, what's the determining factor whether you use one or the other? Is there a benefit to using one or the other? You could just use, why do I have an option if I can use one or the other? I guess that's what I'm trying to find out.
Yeah, so it depends on who the lender is and who the borrower is, right? So you do have that option to choose. So if I am the lender and I'm the trustee, then I'm gonna choose where I'm located and I'm gonna disperse from where I'm located.
Okay. Okay. That's what I want to understand. Okay.
Yes, ma'am.
That's it for me. Thank you so
Mm-hmm.
much.
Yeah. So on the other side of that, you'll receive loans from the trust. So when you receive loans from the trust and the trust is the lender, then you'll use the trust address.
Gotcha. Thank you.
Thank you for asking that good question, Miss Sylvia. All
All
right,
right.
next we have Keisha. Hey, Keisha. Hey, Keisha, are you available? I don't see you anymore.
Hey, Christina. Can you hear me now?
Hey. Yeah, perfectly. How are you?
I'm doing well. You know what was crazy the other day when you was talking about the magic school bus, and you do have a Keisha in the classroom.
I
But
know,
yes,
right?
but
Yeah.
so whenever you have the trust established and everything, and you begin to purchase more asset, how do you add that into the established trust?
Okay. Can you say that again? When you have an established trust and you want to add more assets to the trust, is that the question?
Right, like properties, more land.
Yeah, so you can add in, okay, with your trust, you can add or remove assets whenever you want. So the process that you have to take is one, your Schedule B is a living document, okay? So you're always going to keep an updated Schedule B. So if you're going to add property, then in your Schedule B, you're going to add like a piece of real estate, okay? So you'll add it there. The next thing is you're going to have a board meeting about it, saying that you're about to acquire an asset and all of the details for that asset, right? So, property address, title, all of this stuff that you have to document, right?
Okay.
And then the next thing is when you acquire that asset, right? You have to determine, there's two ways, right? So if you're going to acquire it in your personal name, then you'll close in your personal name, right? And that's like for proof of funds or anything like that, right? Whatever your strategy is. And then you can deed it over to the trust after you close in your personal name, or you can close directly into the trust, which a lot of people do. So they'll close directly into the trust. And so then you're done, right? And then you just have to document. You have to add your new deeds into your trust documents.
Okay. All right. That was it. Thank
Okay,
you.
perfect. You're welcome. All right, next we have MacArthur.
Hey, Christina, how you doing today?
Wonderful. How are you? So how do you pronounce
Blessed.
your last name? Is it Seabury?
Yeah, you got it right.
Okay,
Perfectly.
awesome. Okay, awesome.
Yeah, once again, I want to say thank you for orchestrating another value-packed day today. It was very impactful. Yeah, go ahead and do your thing.
Awesome. Okay, it sounds like he's having a good time because Mr. MacArthur, like he's like a tough critic. So I'm glad that we're like able to, provide so much value. This is wonderful.
I'm not a tough critic. I actually need a lot of help. That's why I've been asking a lot of questions.
What? You know what? You know what?
What?
That's what we're here for. And so that's why after the workshop, we always have master classes. So we got a
Oh,
bunch of other educators that's going to come in. So it's not only the ones that you experience here in the workshop, okay? So we're all here
okay.
to help.
Absolutely. And that's why I'm here. Thank the Lord.
Hey, 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 I know, right? Amen. Hallelujah. All
Oh, cool.
right.
Yeah, so going back to the meetings you were doing today, the banking minutes. One of the
Uh-huh.
questions I had about that today, you were talking about the trustees would be used. You were using the word singular, singly. Did you
Mhm.
mean that the trustee would, or the trustee or trustees would be able to operate with the bank independently, or
Yes. Yes.
okay? And then when you would say jointly, that would mean that every trustee would have to be available for every action that would need to be taken. Is that correct?
Take it with the bank, correct? Yep, jointly. So, and that's optional. That's up to you. If you want that to happen, so you just have to change it to jointly, and then you have to make the appropriate changes on your certificate of trust to show that it has to be joint actions.
Okay. Yep. That was a correlation I was trying to make.
Yep,
Okay.
you're correct. Yep.
And then the other thing I wanted to ask, when you're actually holding your meetings in the different trusts or and your businesses, like on average, how many meetings would you say you have on a quarterly or annually basis? And then also, can you define the differences between just the regular meeting and then the special? I think you had an annual meeting that you had called out to.
Yeah. So you're required to have one annual meeting. The one annual meeting is all about the financial status. So you're
Mm.
letting everyone know what the financial status of the trust is, right? So how much money do we have in the bank account? How many assets do we have? Do we plan on liquidating anything? Do we plan on acquiring everything? What does the next 12 months look like for us? What did the last 12 months look like for us? That's what your annual meeting is. It has nothing to do with, with anything else, right? It's just strictly financial. So you are disclosing what the books look like, you're disclosing what the accounts look like, you're disclosing what your P&L looks like. So all of that stuff, okay? Your special meetings are if anything random, arises, right? So with the special meetings, those are meetings, for example, if you're going to go, sell an asset because you're low on funds, right? The trust fund is low on funds, so we're going to go ahead and sell this asset so we can add to those funds, right? That's considered a special meeting. So anything outside of the annual meeting is a special meeting, okay? So we don't have like anything like like general. So it's either a special meeting or an annual meeting. So like what we did today, that's considered a special meeting. Okay. So that is anything major that you need to do for the trust and you want to document it, right? So one thing that's major is getting a bank account. Another thing that's major is closing a bank account. Another thing that's major is buying a house. Another thing that's major is closing a house. Another thing, like anything dealing with assets is really big, right? Or anything dealing with succession, like I'm appointing this person. That is huge. So you need to have a meeting about it, right? Or that person just resigned and now we have a vacant position that then needs to be filled and we're going to fill it with this new person, right? So anything dealing with people that hold positions inside of the trust, those are major things that you want to have a meeting about as well.
Okay, so like you said, everything else outside of the annual meeting is just a special meeting.
Yeah, so it's hard to answer your question about how many meetings you're gonna have, per day, per week, per month, per quarter. It depends on how you operate your organization. Some organizations, they don't have any activity, and so they don't really require any meetings. They only have that one meeting, right? And some have a lot of activity because they hold a lot of assets or because they're holding an LLC that has a lot going on. So they are constantly having meetings quarterly. So it depends on operation.
Okay, yeah, that makes sense. One of the things I'm working out in my head is just envisioning all the different things that could happen because all the things that you did mention are things that do come up. And I can see where, yeah, I need to do like, for instance, today during this meeting, my neighbor pipe was busted and I was getting leaking all in my unit. So I'm dealing with that. So that could be happen, in a rental unit, so something like that, it would definitely need to be documented. Um, so I was looking, just trying to think about a process to organize the actual documents if you're having a lot of them. And since you were saying the format that you're going to use is to call each meeting when it's completed a resolution, I was thinking you'll probably number those in some fashion, especially if you're storing those electronically, you need to pull those back up. Is that something that you do?
I don't number them. So I just put them obviously collectively in one section, but I don't number them.
Okay. So it's really just a matter of just using the template and just storing them right in that one section. Um,
Yeah, where all of your
yeah.
meetings are. Absolutely.
Do you ever run
But
into the issue?
that is a good strategy though. So yeah, number your meetings. That sounds great.
Okay. Yeah, I'm just working, just thinking, how can I do this? And um, to create a straightforward, repeatable irrevocable process that not only I can follow, but then all of my family members can follow. Because, you know, what you basically said is you got to document, and this is very important. So I'm
huge.
trying to instill a good habit up front.
Yes, absolutely. I agree with you. I'm totally in alignment with that.
Excellent, excellent. So that's all I have. So thank you very much.
Welcome. Thank you as well. All right. Next we have Harap Ola. Is it Ola? Alicia.
Actually, Ola is perfect. Thank you. Hi, Christina.
Ola, okay.
Yeah, most
Yes.
people call me Ola anyway.
Yes.
Thank you so much.
Okay, that's beautiful.
I have two questions. So when you were saying earlier that the grantor only has to get an EIN, well, one of the three things, do they just get a regular EIN in their name? Like, what if they
Oh,
already
no,
have
no,
an
no,
EIN?
no, no. No, they have to apply. Were you here earlier at the beginning of the call when we did the EIN application for the business trust?
I missed a part of that. I was driving. So that's where the
Oh,
grantor
okay.
is
So
doing that?
correct. So they're either doing it or they're providing you with the required information, which is their first name, middle name, or initial, last name, and their social. So they can give it to you and you can do the online application, or they would have to do the online application. So that's what I mean when I say that that's one of their duties.
Oh, okay. They are applying for the EIN. And I remember MacArthur asked yesterday, he was clarifying. So it's like the grantor is the one that's really creating the trust, and I'm carrying out the duties of the trust as the trustee.
Correct.
And
Yeah,
the grantor doesn't have any real rights per se
nothing,
after
exactly.
it's created. They're just
After it's
there. They
created.
say, hey, Alicia, Olapaju, I think you need to create a trust for your children. And they go ahead and help me to do that or do that.
Uh-huh. Yeah,
Okay.
absolutely.
So my other thing is really goes back probably to the first day. I have a kind of a hard time understanding between the revocable trust and the irrevocable trust because I was attending a lot of trust workshops previously, just trying to understand. And they all are, about revocable trusts. And in that situation, you're the grantor and the trustee. And whenever I did speak to the attorneys that did the workshops, they were very discouraging about creating a irrevocable trust. So can you just explain just a little bit as to why the irrevocable trust as opposed to a revocable trust to start with? Because they think they said the revocable trust becomes irrevocable when the trustee passes anyway. So I
Yeah,
just kind of
no,
wanted to
it's
understand that.
it's not when the trustee passes. So the revocable trust becomes irrevocable when the grantor passes away. And with the revocable trust, the reason why we don't want to use revocable is because your assets are not protected in a revocable trust because you are the grantor and the trustee, right? Typically, sometimes you're even the beneficiary as well. So with a revocable trust, creditors can come after the revocable trust. The revocable trust can be penetrated through the court system and assets can be taken out of the revocable trust. The revocable trust uses your social security. It doesn't have its own separate EIN. So with the revocable trust, it's seen as your alter ego. It's seen as you. It's not seen as a separate entity from you. Now, the reason why attorneys are going to speak against it is because they are looking at it from a standpoint of you being the grantor, you putting in your house, and then you no longer having control over the trust and you no longer having control over your house. That's the way that they see it. They see it from one lens. They don't see it from, another. And I'm not going to say all attorneys because some attorneys get it, right? They really do. And some don't. So with the irrevocable trust, it just depends on the position that you take. And so that's why we show you not to take the position of the grantor because it's going to be a disadvantage to you to not have control. So you want to maintain control, you want to maintain power, and that's why you can't be the grantor. You have to serve as the trustee. So if you didn't have that conversation with them, then they are not able to, to pretty much, tell you these things. So with the irrevocable trust, your assets are fully protected. And that's the whole reason why we're setting up a trust. Why would you set up a trust and place your assets in there knowing that your assets are not fully protected and they can be seized? That's, to me, is a waste of time.
Right, absolutely. And then as the trustee of my irrevocable trust, I can make the changes that I need to make as time goes on.
Absolutely. So you have to review the trust documents, right? You have to review the contract. So when I was talking about when I was reviewing the provisions yesterday, Tuesday and Monday, the
Yes.
verbiage is in there. In the trustee powers, it tells you that you can make any and all changes. You can terminate the trust. You can remove beneficiaries. You can remove trustees. You can do anything and everything. It's inside of the contract. So you don't have to be worried to think, oh my God, I can't make changes or amendments. It's inside of the contract. So no one can tell you contrary to what's inside the contract. So that's why it's important for you to know what's inside of the contract. And that's why I'm very thorough and I break down everything so that you can understand and you don't have to worry.
I appreciate that so much. Like I knew your process was correct. I just needed to hear it being said in your words in a way that I can process it, to repeat it in a way that gives me confidence. So thanks for the empowerment and clarification.
You're so welcome. Thank you, Ola.
Mhm.
All right, so it looks like we are done for today, you guys. I'm super excited. So tomorrow, let me tell you what your homework is, right? So your homework for today is to work on two things. One, book the call with Brian Dorsey and his team so that they're able to get you in the position to where you are ready for funding, right? You want to be fundable, or what we call credible, right? So you want them to be able to look at your profile so that they can see what changes you need to make so that you can get to that level where they can get you 6 figures, okay? That's the whole point. You need to be able to obtain the funding that you need to acquire the assets that you need so that the trust can sustain itself, okay? We're not in the business of pouring money into the trust that we just worked 40 hours for. That is not what we're doing here. We're building wealth and we're going to use the bank's money to build the wealth, okay? So go ahead and book that call with Brian Dorsey and his team. The next thing is I need you to work on that asset inventory list because tomorrow we're going to hit the ground running talking about assets, okay? So in the asset inventory list, it's a worksheet. You need to go ahead and take inventory of everything that you have. Some people, they didn't even, remember that they had an old 401k from a job, or that they had, any other type of asset, right? And so that's why it's important for you to do that work initially before you even get into the space or mindset of transferring assets, okay? So work on that because that's what we're going to initially go over tomorrow. And that asset inventory list, you want to add it to your trust records, right? Just in case anything happens to you, they can go straight there so that they know what the next steps are, okay? Your successor. So that's your pieces of homework. And now tomorrow we are going to be focusing on assets and the insurance policies, okay? So tomorrow we're going to, you're going to receive templates. For one is for the quick claim deed, so you can put property, real estate. The other one is your bill of sales for the vehicles. And then the business purchase agreement for your LLCs, that's going to go inside of the trust. And then we're going to review the index universal life insurance policies. So our educator is going to come in and break down that policy to the T to show you how to build wealth with that policy and how to use it to eliminate debt if you have debt, okay? So that's what we're going to be working on tomorrow. So you're going to get an email 1 hour before the Zoom so that you have access to the Zoom link as well as the template and resources. And so we're going to meet here tomorrow in this place and space, you guys, okay? Maria, do you have a question? We're closing out, my dear. All right, you guys have a blessed and amazing day, and I'll see you guys